Were you aware that approximately 71% of Americans who declared over $1 million on their income tax returns in the last 50 years were in real estate? That's right. Real estate investment is a proven path to wealth creation. Today, we're diving deep into how you can finance your real estate investments, even if you're starting from scratch. If you're ready to take the first step towards building your real estate empire, make sure to hit that subscribe button and turn on notifications so you never miss out on valuable insights. Let's get started and unlock the secrets to funding your real estate dreams. Real estate financing involves sourcing external funds to acquire and improve properties, utilizing loans from banks, private lenders, or other financial institutions. Knowing the interest rate, repayment plan, and the total sum repayable is important. These details outline the investor's responsibilities and ensure clarity throughout the investment journey. What are the terms of real estate financing? The terms of real estate financing encompass the conditions agreed upon by the lender and borrower, including the loan's duration, interest rate, and repayment schedule. What is underwriting in real estate financing? Underwriting in real estate financing is the process where a lender examines the financial health of the investor and the potential of the property investment to ensure the loan can be successfully repaid. Real estate investments are renowned for their benefits, such as enhanced cash flow, property value appreciation, and tax deductions, making them a favored approach for wealth accumulation. How to obtain funds to finance your real estate deals. Securing financing for real estate investments may appear daunting, especially under the common misconception that a substantial initial capital is necessary. However, this belief doesn't hold water. Let's simplify the process. What is the myth about real estate investment financing? A prevalent myth is that a large sum of money is required to start investing in real estate, which deters many potential investors from taking the first step. What are the financing options available for real estate investments? Numerous methods exist for acquiring the necessary funds for real estate investments, including loans from banks, that is, if you wish to go down the traditional route. These are archaic sources but necessitate a good credit score and a decent down payment amount. Also, most banks do not give loans to investment properties that are owned by an LLC. Hard money lenders, ideal for swift loans, albeit with higher interest rates. Private lenders, individuals who offer loans, often with more adaptable terms. Government loans, like FHA, characterized by lower down payments, facilitating an easier start. Crowdfunding involves funding from numerous online investors. Use self-directed accounts to fund your transactions. We will discuss this option later during the video, or think of ways to save money in taxes and then use that money to finance your next deal. Because let's admit it, taxes are one of the biggest expenses for any small business owner. How do you choose the right financing option? Selecting the appropriate financing solution is vital and should align with your investment goals. For instance, for quick property turnovers, such as fix and flip projects, hard money loans might be preferable due to their speed, despite being pricier. For long-term holdings, like rental properties, traditional bank loans or FHA loans may be more advantageous because of their lower interest rates. Understanding the various financing options and choosing one that complements your investment strategy can democratize real estate investing, irrespective of your initial capital. Don't let the misconception of needing significant upfront investment deter you. With the correct approach, real estate can become a profitable investment avenue. Let's talk about the real estate financing options in detail. Here's a straightforward explanation of what each financing option entails. What is cash financing and its benefits? Cash financing means paying for your investment upfront without taking on any loans or interest. This approach can secure better deals and facilitate faster transactions. Who should consider cash financing? It's most suitable for investors who have substantial savings and wish to avoid debt, or those seeking a speedy purchase. What are hard money lenders and their costs? Hard money lenders provide financing for investors who might not have the best credit but require quick funding for a deal, albeit at higher interest rates and fees compared to most bank loans. How do private money lenders work? This involves borrowing money from personal connections, such as friends, family, or professional contacts, often offering more lenient terms and repayment schedules than conventional loans. What is the advantage of self-directed IRA accounts? Investing your retirement savings into real estate through a self-directed IRA allows your investment to grow tax-free or tax-deferred, leveraging your retirement funds for real estate investments. Why consider seller financing? Seller financing can simplify the qualification process and potentially reduce closing costs, offering an easier path to financing directly from the seller. What is peer-to-peer lending and its flexibility? Peer-to-peer lending enables you to borrow money from an online pool of investors, offering flexibility and an alternative to traditional financing methods. With real estate being a significant avenue for wealth creation, comprehending these financing alternatives can unlock investment prospects, regardless of your initial financial status or history. Each option serves a distinct purpose, catering to various needs, whether it's avoiding high interest, leveraging personal networks, or utilizing existing assets like retirement savings for investment. And there you have it. Exploring the world of real estate financing shows us that there are many paths to achieving our property investment dreams, even if we're starting with little to no money. Whether it's through loans that cater to fixer-uppers, leveraging the equity in your home, or tapping into government-backed programs, there's a solution out there for everyone. Remember, the key to success is understanding your options and finding the best fit for your goals. So dive in, do your research, and take that first step towards building your real estate portfolio. Thanks for watching, and don't forget to like, share, and subscribe for more insights into making smart investment choices. Let's build wealth together.